This is Jody Trana with Chapter 2, Part 5 of Principles of Accounting. This presentation will review some of the business journal entries, as well as posting to ledgers and all the way through building a trial balance. Before you do this presentation, I would recommend that you go to Canvas and print out Chapter 1 and 2 blank working papers for test practice. This is located under the Test Chapter 1 to 2 module. It's called Chapter 1 to 2 Blank Working Papers for Test Practice. You'll want to have your hand on the pause button so you can pause in between the transactions so you can write your journal entries and do your postings to the ledger. Here's a list of the transactions that we're going to review in this presentation. All of the transactions for July 2, we're going to write journal entries for them, including explanations. We're going to open T accounts, or if you've printed off the information that I recommended, you'll be doing ledgers. And then we'll be doing a July 31 trial balance at the end. The first transaction is on July 2, when we received $12,000 contribution from Brett London, the owner, in exchange for capital. Pause the presentation and then write your journal entry. Be sure to include explanations. Here's the journal entry for July 2 when we received $12,000 from Brett London. We debit cash for $12,000 and we credit Brett London capital for $12,000. The explanation is simply owner contribution. Please make sure that you review the formatting of a journal entry. The debit always comes first, and the credit is indented at the account line and also under the credit column. The explanation does not need to be indented or italicized, but it is nice to write it a little bit differently so that you can easily tell that it is your explanation. Now go ahead and pause the presentation while you post this journal entry to either your T accounts or to your general ledger accounts for cash and capital. If you've done T accounts, this is how they should look after this first journal entry on July 2. On July 4, we paid utilities expense of $410. Pause the presentation and write your journal entry. When we pay for utilities expense, our journal entry is a debit to utilities expense for the $410 and a credit to cash for $410. Now pause the presentation and post this journal entry to your ledgers or to T accounts. When you post this journal entry to your T accounts, you will now have two transactions in cash, a debit and a credit, and you'll have a debit in utilities expense. If you are running a ledger instead of T accounts, you will need to have a running balance for your cash. That would be your debit balance of $12,000 minus your credit of $410. The next transaction is on July 5 when we purchased equipment on account for $2,200. Pause the presentation and write your journal entry. The journal entry would be a debit to equipment for $2,200 and a credit to accounts payable because it is on account, not paid with cash, of $2,200. Pause the presentation and post this journal entry to your ledger accounts or to your T accounts. We're using two brand new accounts this time, so this is the only balances that we have. Make sure that your equipment is debited for $2,200 and your accounts payable account is credited for the $2,200. On July 10, we performed services for a client on account for $2,800. This means that we've provided some services to one of our customers and they have promised to pay us in the future. Pause the presentation and write your journal entry. When we perform services for customers and they promise to pay us later, the journal entry is a debit to accounts receivable and a credit to service revenue. Pause the presentation and post this journal entry to your T accounts or to your general ledger accounts. Again, we're using two brand new accounts, and so these entries are the only ones that we will find in these T accounts or these general ledger accounts. On July 12, we borrowed $7,500 in cash and we signed a notes payable promising to pay back the money in the future. Pause the presentation and write your journal entry. When we receive cash, we will always debit our cash account, and in this case we're promising to pay in the future and we've signed a note to indicate that we will pay, so we put this amount under notes payable for $7,500. Pause the presentation and post this journal entry to your T accounts or to your general ledger account. This time we're posting a third entry into our cash account, and our notes payable is a brand new account. If you're doing two T accounts, it should look like this. If you're doing a running ledger, then your cash account should have a running debit balance of $19,090. On July 19, the owner, Brett London, withdrew $750 in cash from the business. Pause the presentation and write your journal entry. When the owner takes money out of a business, that's called owner withdrawals. In this case, it's called Brett London withdrawals. We would debit that account for $750 and credit the cash account for $750. Pause the presentation and post this journal entry into your T accounts or your general ledger accounts. This will be your fourth entry into your cash account. This time it is a credit, and the very first entry into your withdrawals account. If you're doing T accounts, they should look like this. If you're doing the cash ledger account with a running balance, your balance should be $18,340. On July 21, we purchased office supplies for $860 and we paid cash. Pause this presentation and write your journal entry. When we purchase office supplies for cash, we know that we need to credit cash in order to reduce it, and office supplies is an asset, so we will be debiting that to increase its normal balance. Pause the presentation and post this journal entry to your T accounts or your general ledger accounts. When you've posted this to your cash account, you will see that this is our fifth entry into cash, and it's our first entry into our office supplies account. If you're doing the general ledger and you have a cash ledger account, your running total in your balance should be $17,480. You remember back on July 5 when we purchased equipment on account for $2,200? Now we're going to pay for that liability. Pause the presentation and write your journal entry. On July 5, we posted a credit into accounts payable of $2,200 to indicate that we needed to pay that liability, that was an obligation that we were promising to pay later. Later has arrived and now we're paying that. So to eliminate that out of our account, we will need to debit accounts payable for the same $2,200. And as we pay this, we're decreasing our cash account. So that's a credit to cash of $2,200. Now pause the presentation and post this journal entry to your T accounts or to your general ledger accounts. All right, with this final entry, we now have 6 entries into our cash account, 2 debits and 4 credits, and we have cleaned out our accounts payable account. We have a credit that showed up in July 5, and then we just now have debited that account to show that we have made that payment. Now you need to take a look at all of your T accounts or your general ledger account balances and prepare to do a trial balance. Remember that the trial balance needs to include all of the accounts that you have in your company, starting with assets and then liabilities, then your equity accounts, which includes your capital, your withdrawals, your revenue, and your expenses. Remember to arrange your asset accounts in order of liquidity, with cash being first as the most liquid, and your expenses, arrange those in order of the largest expense to the smallest expense. Pause the presentation and complete your trial balance. Here's your completed trial balance. It should look like this, with the asset accounts first, listed in order of liquidity, and then we have our liability accounts, our capital account, our withdrawal account, revenue, and expense. In this case, we only had one expense account, so you did not have to put those in order. The trial balance balances because every one of these account balances is placed on the correct side.